Hello, Jim Dobler here, retirement income planning speaker and advocate. And yesterday I was doing a workshop with about 14 advisors, and we were talking about how to incorporate life insurance in retirement planning for both retirees and pre-retirees. And one of the advisors just blurted out, now mind you, these were advisors who were pseudo new to the industry, under 5 years, so they're doing fine, but they haven't made it yet. So one of them blurted out, "What's the best life insurance for my client?" And I just sat there and my answer was, "Depends." And we spent the next 25 minutes talking about the different types of life insurance and how you can position them with the client. And I wanted them to really discover on their own the different main types of life insurance and who they would best fit with. So we started talking about the three main types available right now: term insurance, whole life insurance, and universal life insurance. And they came to the conclusion, and again, this is a generalization, so every client is different, so it depends on the client. As I say, every financial product is both fantastic and horrible. It just depends on the client. But with term insurance, they came to the generalization that mostly people in their 20s and 30s, people maybe possibly just married with kids. Term insurance, very inexpensive for most people. The drawback to term insurance is that only 2% of them are actually used. Most are either canceled or maybe converted into some sort of permanent insurance. So that was the first one, term insurance for the 20s and 30s, the new families, so to speak. Then we went over to whole life insurance. And obviously this is permanent insurance. They decided it was geared more towards the engineer types. And I had no problem with them saying that because my entire family are engineers, where there really isn't many variables in the whole life policy, except possibly if the company was going to declare any dividends. The client knows exactly how much cash value they're going to have at whatever age, how much they're going to pay for the rest of their life. So they concluded that it was proper for those engineer types who really wanted to know where the policy would be at every point in their life. And then the final type that we spent the most time on is universal life, where you have a tremendous amount of flexibility. You can stop paying the premium as long as there's enough cash value to pay for the cost of insurance. They had come to the conclusion, and I agreed with them, that universal life is best suited for those people maybe in their 30s, 40s, 50s, as possibly the flexible type of coverage, but also as a vehicle to use in retirement income planning, where the client can possibly take out the money tax-free and utilize it to supplement possibly when the market goes down. So I was very happy with the way that they came about their answers. Now obviously with universal life you have a lot of different options, whether it's fixed, indexed, or variable, but I didn't want to go that deep. So just to summarize, three main types of life insurance: term, whole life, universal, and we went over what different types or what different categories they best fit. Again, it was very much of a generalization, but it was a nice activity that they used to come to their own conclusion. Thanks a lot, and everyone have a great day.